Sorry about that, peoples. My internet randomly went out. Or internet, my power. Sorry, yeah, my power just went out. It came back on. So, yeah, yay, yippee. Is that really a 1 minute gap that big? That's pretty impressive. Welcome back, peoples. Welcome back. We are still pretty much. Let's see what the market's doing. Yeah, market's still holding support. So trend on the market is still positive for the time being. So there's no breakdowns to worry about for the moment. Yeah, we're just hanging out. Same old, same old. Market's positive, holding support. You guys know the algorithm support level for the SPY is pretty much right about 683.85. So you can pretty much see why we're holding the markets where we're holding the markets for the time being. Remember, the algorithm level is here. So that was negative, positive, back test, hold, back test, hold. So market is still on the positive side right now. this. Okay, sorry about that. Yeah, my power went out for some reason. Don't really know why, but yeah, we're back. We are back. What an absolute scam. 'What's a boring day? Well, I mean, it's not really boring. It just is what it is. Typical stuff. Do 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 do. 10:44, and the market has pretty much done a whole lot of nada. And I mean, too, you can pretty much see we're just trapping the market between the 10 SMA and the 50 for the moment. Market's not willing to break down. Market's really not willing to bounce and rally. It's just willing to basically go back and forth and hold above support, which is fine. Nothing wrong with that. Do I do any scalping? Yeah, I guess I do. Because a lot of times, anytime I take a trade, I'll always take some, maybe scalp some along the way for like a day trade, and then I can many times hold into a swing trade depending on the setup. But yeah, I mean, if you're thinking about like if you're talking about scalping, like sitting and just hyper focusing, scalping futures constantly over and over and over, I have done that at times, but I don't particularly do that on any given day. So nowadays, I'm really just looking for trend direction, low risk setups, market structure. So yeah, I'm not necessarily looking for like small scalp trades. I am more or less looking for bigger picture direction. Therefore, if I'm right, there's going to be a bigger move. Your scalp trade will have a bigger profit because, like, for example, right, when you talk about scalping, like today we know that the support for the market, the support trend is this SMA down here. So arguably, if you're looking for scalps, then this blue zone, right? So that's it. When we're below this, the market is in a neutral to bearish state. If we're above, it's in a bullish state, right? So this would be a back test to support. You could have arguably tried to scalp that. This would be back test and support. You could try to scalp that. This is back test and support. You can scalp / trade that, right? So yeah, there's scalp trades to be had within the strategy and kind of approach that I use, but it's not like I'm going out particularly looking to scalp trade, right? I'm just looking for the algorithmic control points of the market and then looking to position myself in the direction of that, if you will. And if I'm correct, then the market should move in my favor and so on and so forth. So I'm not particularly looking to scalp. I'm looking to be in the right side of the market's algorithms, which can be scalp trades, swing trades, etc. Because every single good move in the market as far as market transitions will happen from the 50 SMA, which can lead to a great scalp trade, to a big day trade, to a big swing trade. And if we go back just a little bit in time, the best way to explain that would be like this right here, right, on that day. So if we go back and we look at this day, right, when the market broke down its 50 SMA here, I'll go back on a 5-minute, right, there you go. So arguably you could have attempted a short on that day when the market opened. See, the market opened on this day, a couple days ago. Ready? So this was market open. Market opened with a gap. It sells back to the algorithm level, which is the blue line. It kind of hangs out for a second, and then eventually they decide we're going to break it down, and there you go. And that's the transition of market structure below the 50 SMA. You could have scalped that down, held some with the stop above, and then they're mega trade, right? And or you held into the end of the day, right? Et cetera, right? Or, oh snap, you could have used the 1 minute 50 SMA strike. So I'm always looking for like a specific setup or something that I like. And again, they don't come as frequent as someone just kind of sitting around scalping every little bit of price action. Now, if I do want to sit around and do some scalps, a lot of times I'll use 1 minute volume weighted average prices. So if I want to, sometimes I will do a little scalp here and there, but it's off of 1 minute VWAPs. So, you know, here's a scalping strategy that I do use at times. Let's go. Hold on 1 second. I'm going to take us to like today's price action. Right, so if I wanted to scalp 1 minute price action, a lot of times this is what I'm going to do. I will take a VWAP and I will anchor like here to the low point, and I will put entries or look to buy when the market pulls back into the VWAP. So the whole gist of this strategy is literally tracking previous bottoms. Psychologically, it means tracking previous market participants' participation and then pulling back into their stop losses, right? So this is what we do. We take VWAPs, we anchor to the low, all right? And not only do we do it, like in this instance, it would be this red candle and this green candle. And then that is where I would look to enter long on a scalp right there. And then as the market holds and goes up, I would sell, right? That's something that I arguably do, right? You know, it's not always perfect, but as far as not buying tops, waiting for things to pull back to specific levels, like right here, for example, okay, here's another thing, like watch, we can move this VWAP to this low, all right, and like arguably that would have been a long entry for me on a scalp, because it just, again, this is the trend, right? It's going up, it's holding higher lows. I take the volume weighted average price of previous dips, and that helps project where future pullbacks will be and potential supports within that trend, right? So that's how you can knock out a few points at a time by scalping. You're not looking for things huge. You're not, you know, you're just riding trend, right? So then we can reverse that, right? So like this is the high a day, so arguably, if I wanted to be short, all right, low, high, low, high. All right, if I wanted to be short, where would I be short at, right? So think about it. This was the previous low a day, This is the previous low a day. Here's the current high a day, if you will. Maybe it's not current, do we break it now, right? So once this market goes into a sell move, right, I would say the key volume weighted average trend is here. So if I wanted to be short, arguably it would be on a retrace to here. There's your roll over, right? So those are my scalping techniques, is tracking everyone that's already played in the market, knowing where their pain levels are, and then participating there. That's what I'm doing intraday price action, if you will, all right? So amongst all of this intraday price action, we are still trying to pick direction off the 50 SMA. When the market is below, you're neutral to bearish. When above, bullish. Back test, still support. Back test, still support. Rolling over, back test, still support until it's not. Okay? So there's a lot of different strategy and edge you can use and how you want to position yourself in a market and find yourself interacting. All right? So when you talk about scalping, that would be one way that I go about doing that. All I don't focus only on scalping. I don't focus only on swing trading. Pretty much I just look at investing as a whole now. A lot of people might be hyper-focused on trading. I used to be. I had really great success like that and then had some downfalls like that. Now I just kind of step back and just look at trading and investing. It's all one big thing. Here's your pyramid. On the bottom, you have most of your investments. On the top, where your pyramid is the smallest, you have your trading accounts and, your trading, if you will. You're supposed to not risk a lot here, hope to make a decent return, slide it down the pyramid, build the base. So it's never about using, nowadays, for me, using tons of money for trading. It's about keeping most of my money in the long-term growth, building, foundational stabilization, smaller capital in the top of the pyramid. And you're just basically trying to use the trading as an additional means to grow the long terms. It's kind of the way I see it. So I don't sit here and go, I have to make money scalping something. Oh, there's a move, I have to do this. I just basically sit and go, if something makes sense, I'll risk some money. Otherwise, I'm not really here to, prove anything or make, grandest trades, nothing like that. And like I said today, we're just basically sitting waiting to see if we can get a breakdown in the market. When we zoom out a little bit and you're not so hyper-focused on, say, like a 1 minute or a 5 minute, you're just going to quickly realize all we're doing is hanging on by a thread, arguably, right? The market transitioned positive. Markets went long. They hit 1 hour resistance here. So 1 hour downtrend remains. We move back to back test 30-minute uptrend here. We're just barely holding. If the 30-minute trend gives up, the market makers may be willing to flip structure of the market, and then we go into a selling operation. All right. So that's basically what we're trying to decide right now. Whether me as an individual trader and investor, the market collectively, market makers, algorithms, programs, etc. Retail traders have no clue what's going on. Most. They're not reading the market like that. And that's okay. It's okay. I'm just saying. A lot of people today have no clue. We're kind of on the deciding factor of whether we're going to continue to hold or go into a new short, which is usually, I guess, the majority of most days, right? Deciding whether to go up or go down. So we're just gonna basically just be chilling, and if the market goes into a breakdown, maybe we'll take something short. Again, like you could have traded this market a million times a day if you wanted to. I didn't. I haven't done a whole lot because it just didn't really make sense today. Now, of course, there's always money to be made, and if I really tried, yes, I could probably make money on something here. But today was a day I just woke up and I'm like, I'm just not about it. I just don't. And if you go back to the beginning of the stream, actually, this is another stream because the other one ended because my power went out. But it's back on now, obviously. If you go back at the beginning of the stream, you'll hear me pretty vividly talk about not really expecting too much today, leaning a little short in the beginning, hoping we get a breakdown, knowing we're probably going to do a back test long. Don't think it's going to be a big, just talking about how it's probably going to be a dumb day, right? So I just decided early this morning it was going to be a dumb day. So far, it's been a dumb day. I've decided not to participate on the S&P 500 too much. Did I even do anything today? I still have some on long. Oh, I did buy some long earlier this morning in the pre-market. That was the only thing I've done today, I think, on that. Figures. So, yeah. I'm sure some other people are having fun with this day. I mean, I'm having fun. I mean, like I said, it's a perfectly fine day. It's just a day where the market's not willing to break down, and we're just kind of having a slow little inside grindy-ish day, if you will. Maybe not an inside. Is it an inside day? Yeah, it's hard to tell on this chart. And so, like, here's a little information. So, like, yesterday, you need to remember this pattern because this happens over and over, right? Whenever the 30-minute flips positive, like you're seeing here, it generally goes to the 1 hour. Not all the time, but many times, right? So, ready, watch. So the other thing, too, is remember is the market is literally just going through uptrends and downtrends. So, like, basically, the simple way to say is, like, if a 1 minute goes positive, you know, like then a 5 minute, then a 10 minute, then a 30 minute, etc., etc. So it's just like every time frame is going through its own uptrend and downtrend. And as one time frame goes through an uptrend, another time frame may be in a downtrend, right? So what I would kind of say about yesterday is that we had an uptrend kind of start on the 30 minute. But the 1 hour is still in a downtrend. You see that? So I just flipped to the 1 hour here. So if you look, right, so the 1 hour broke down. This is the 1 hour's trend resistance downtrend backtest, right? It broke down here. This is the reversal long to the 1 hour backtest. But what kind of kick-started the momentum yesterday to go get the 1 hour downtrend backtest? It's the 30-minute uptrend start. So you see, this is where we enter a long operation on the 30. Look at the market patterning on the 30. Here's the breakdown. We'll call this some like inverse head and shoulders, whatever, right? So we know that if you get over resistance, maybe it goes up. When do you get over resistance? Was it on this day, that day, or is it when it crosses the SMA? When it crosses the algorithmic programmed level, computers go long. As a result, we take out your previous highs, okay? Making it appear that price went up because price is breaking out your highs or whatever, all right? So we flip 30-minute positive, algorithmic 30-minute buying program activated. Run it up. But currently below 1 hour. 1 hour still down. So that's how we do uptrends to downtrends, right? You're just cycling through the time frames. Each time frame has its own trend. And trends all act the exact same, whether a 1 minute, 5 minute, 10-year, 50-year. Uptrend start and eventually backtest. All of them. And you have to maybe look at a couple of them to understand which ones are triggered into uptrends and which ones are still in downtrends. Many times your long targets will be the resistance of a trend that's still down, like we did yesterday. So just remember, and it's the same thing. Now if I take you back to the 15-minute, watch. If we go to the 15-minute, it's going to be the same thing. 15-minute goes positive, 15-minute targets 30. 30 goes positive, 30 targets 1 hour. Okay? So if we go down to a 15-minute, you'll see it's the same thing. Right? 15-minute starts an uptrend here. Okay? 15-minute back tests here. As a result, it runs up to the 1 hour, which I'll just put a horizontal price point right there. Right? 30-minute gets positive here. 30-minute goes to the 1 hour, which was there. So, and if we do that, I'm going to add this here, and then I can even go back to, like, say, a 5-minute. When was the 5-minute uptrend triggered? It gets a little sloppy as you get too low, because obviously there's more noise, but the 5-minute was, like, arguably confirmed here, and, like, you know, so it gets a little goofy when you do it like that, when you get too low, but I usually stay around the 15-minute, 30, and 1 hour, and that's going to give you a pretty good idea when things are expanding, you know, in that short term. So there's that, you know. See, like right now, again, we just popped up to the 10 SMA. So pretty much that just means that the market is still holding short-term resistance below its 10 SMA trend. Still working its way down towards that 50 SMA. So again, we don't really have anything great to do on the market for the moment as it's compressing between the two moving averages. The volatility index does not look like it has the volatility to break down, so therefore we're not getting a catalyst to long the markets due to volatility receding. Those that are hedging for downside risk in the market have not taken off their bets. Another reason why markets arguably aren't going up. Those that are hedging volatility still have positions on for downside risk. Not only do they still have positions on for downside risk, but we also don't have a VIX that's going down. So we're in a position where the market today isn't doing anything. It's deciding because there's so many different mixed signals. Nobody's willing to buy the market up long, while the fear index and the hedging are saying, be careful. Right? So that's the day we're having. That's why I'm sitting here this whole time just saying we're just chilling, we're digesting, we're reading. The markets aren't signaling to really do anything right now. There's a couple different mixed signals. We're not breaking down trend. We've kind of bounced it a little bit. There's too many variables that are contradictory, if you will, that are creating an environment where investors and I would say the smarter pack are just kind of sitting waiting. Okay, now if you want to jump around all day and play with that market, feel free. We're just kind of chilling, waiting. Oh boy. Oh, gosh. Well, might as well do a little update on the old M1 portfolio, because why not? Nothing really special is happening. As you guys know, that's a very small account that we're basically dollar cost averaging, growing with you guys here on the channel as kind of a fun benchmark case study for the internet, if you will. So let's see. I actually made a mistake in one of these portfolios too. I had to rebalance it. It kind of ruined a little bit of my return, but I think I like it better than I was going a little heavy in some medical device stuff, and I was like, I think that's just too risky for the time being, or it's just not going to benefit me. So I kind of changed that around, ruined my returns for a little bit, or have a little bit. So let's see. This is this one. So again, we started this, I don't even know, a couple months ago or whenever. This thing's annoying. So basically, there you go. We are up 3% money weighted return. So based off of my timing, my dip buying, my allocating of capital, it's up 3%. If we do the benchmarks, I think they do time weighted. So time weighted returns on my portfolio here are 3.5%. The return of the market so far this year is 1%. So I'm outperforming the market by about 2.4%. Will that continue? We'll see. I hope. The Vanguard Total Stock ETF, I think this is like the first time in quite a while it's actually outperformed the United States markets, but that's kind of been a little bit of a thing we've been hearing about, how emerging markets and international markets might have some better performance over the next decade or so. That might all be in lockstep with de-dollarization, New World Order changes, things like that. So I think there's just a degree of uncertainty about how exactly the New World Order, money supply, currency, de-dollarization, how that's all going to shake out and where money needs to flow. So To be honest, I've already started positioning for that. Now, granted, if the United States markets get smoked, then obviously international markets are probably going to get smoked too. But when the dust settles and the money rebalances itself, what does that world order look like? See? So, anyways, that's that. Now, the simple dollar cost average strategy, which is supposed to be the most basic bare bone investing strategy there is, that's taught to all retail traders, that's pretty much taught to everyone, that even Warren Buffett said you should use to a degree, is basically, well, he said mix some bonds in, which maybe I will at some point, but this is just the most simple one, right? Just literally buy the S&P 500, and you should beat most financial advisors' returns, etc. So this is the case study. Is it true? Will it work? Then again, if the market and the D dollar and it collapses and I'm buying into the SPY, then no past performance is not indicative of future performance, etc. Right? So the objective of all these portfolios, one is a case study for the rest of my life for the internet to use. We will see just how well the recommended strategy is that the entire world suggests. What happens if the United States markets get Japanned, and I'm dollar cost averaging in a down market for the next 15, 16 years? The performance of the portfolio is going to look absolutely ass. So, just because it's worked in the past doesn't mean it's going to work in the future, right? Because as everybody inflates all their money away here in the United States, where's the money flow? It flows to stocks, right? So unless inflation and things keep ramping up the way they have, then you would see stocks start to underperform, right? So there's just a lot of different variables, but it'll be fun to see how it all plays out in the end. So as you can see here with this one, see, this is the funny part, right? So it's funny when you look at time-weighted returns versus, the difference between money-weighted returns and time-weighted returns. Because money-weighted returns is based off of what I or you do as the individual investor when you allocate the money, when you choose to buy. So that return is based off of how well you chose to, or when you chose to buy, right? What's that return look like, right? But when you try to do a comparison to benchmarks, you do a time-weighted return, right? So basically just over the course of how long the money's been invested, time-weighted return, my strategy is giving me about 0.5%. The market is beating me by about 0.5%, right? Remember, it is extremely hard to beat the S&P 500 if you're only buying the S&P 500, right? But if you look at the time-weighted returns, right, it's only 0.11%. So at the end of the day, still underperforming the market there. And that's simply because, it just changed a little bit. And that's simply because I'm literally just buying the market. So the only way I can actually beat the market is if I'm always perfectly buying it on sale, which is possible. All right. So in this, and actually one day I will, again, like I said, I'm going to sit down, I'm going to build a guide so you know exactly how money goes in this account. This one basically only buys the S&P 500 if it's on sale or in a negative trend. See, most of the time on our stream, we talk about short-term trading, short-term market movement, right? If you're going to put, trading money in the market, you can't be too early, right? If you're going to invest long-term, you could be early on a dip, right? You know what I mean? So when we're dollar cost averaging like this, we want to make sure we're buying the dip for the long term, right? So this money in this account gets allocated when either the standard deviation of the market is on sale, so I'm buying at extremely undervalued prices, or to some degree undervalued prices, or just in general when the market's going a dip, so that when they recover, what we've bought generally creates a return, as opposed to buying after the market goes through a buy signal. If I buy that and then it goes through a downturn, that money foresees a loss prior to return. So the effort here is that we will keep pace and maybe even possibly beat the market by only taking on position during red dips or when the standard deviations are far more in our favor, right? So one day I'll put together like a little guide and outline so you kind of know the approach that's being used for all of this anyways. Those same rules apply for the smart money portfolio, right? The smart money portfolio does the same thing. This buys when things are on sale or standard deviation, etc. That's objectively when we try to take things long there. So yeah, I mean, and this one is just a mix of, and again, this is like super basic. This is meant for the super basic dollar cost average, easy investing for everyone, right? Because, you know, on our stream, it can get a little crazy talking about markets going this way, going that way, going this way, going that way. But here you go. This is literally very simple stuff that you can kind of learn from, play with. Again, I have multiple other accounts. I really just started this for funsies and for everyone on YouTube, and because that's something fun. Obviously, I know people like to follow along on YouTube. And then obviously, if we do this for the entirety of my entire life, it will then end up being a great case study for people to review on the internet. It will be a nice little legacy to leave behind when I kick the can, right? So, yay. And yeah, so I got some medical advice stuff, I got some healthcare stuff, some bonds, just basically, you know, international market stuff, and then total stock market stuff. So it's basically just a pretty conservative, diversified portfolio that uses timing strategy to hopefully create better return so that we're not investing on highs, we're only buying dips. And those dips come when the 30-minute SMA calculations go negative. So it's not really a question of whether you're buying the right dip, because we always know that if the market is below the 30-minute SMA and it's selling off, that is the true kind of selling correction move. It's not just the dip in an uptrend, right? That's going to later be put negative when we go through a sell pressure move. So anyways, cheers. What happened? Where'd that thing go? Where'd it go? VIX, ADP. Whoa. What? The internet is not ready. They are not ready, but they are sweaty. Oh my gosh, what is going on with Bitcoin? Can someone please tell me what is happening? Everyone on the internet told me Bitcoin was going to make me rich, and now I'm sitting here not rich. And CNBC keeps telling me that it's going to pump this, it's going to pump that. They bring someone on in a fancy suit to try to tell me this or that, and then next thing you know, I lost all my money. What is happening? What is going on? Nah, I'm just kidding. Just having fun. Funsies. All right, so as we can see, the market is still holding the 50 SMA support. So the algorithms and the computers are not willing to let the market break down yet. Again, it's not rocket science. Algorithms control price. That was negative, positive, backtest, backtest, backtest. Okay? This support bounce is not because we bounced here. This support bounce is not because we bounced here. These support bounces are bouncing where they're bouncing because that's where the algorithm level is at, and it was always there. Price action didn't need a support there to know that that was support. I mean, I guess it kind of does, but support possibilities were always there before the first bounce, right? Before this bounce, the support possibility was there. Before this bounce, it was always there, right? Because that's where the algo is located. Is good old Medi McSweaty gonna start a long op here or what, dude? It's so hard to tell because the rest of the market's just been moving like a stinky dinky turd. $11.17. Well, it's safe to say that the market is pretty much just saucing and tossing most people today. Not us, but most. Nope, not me, not you. Volatility, see, that's the thing, is like right now volatility is below the SMA, but it hasn't really started selling off. People are still hedging downside risk in the market, so I still can't really get behind the market's just going to rally off into a long yet. Maybe, but I still just can't bank on that because, well, people are still hedging risk right now, so unless they pull their bets off the market, I'm not willing to just rally the market up. You could, and I haven't even really been buying these dips because I'm already long, so it's like either the market works and I get paid or it doesn't, and maybe we go into a sell-off. So again, I'm have a little long UPRO, 3x leverage ETF for the moment. If it goes up, great. If it doesn't, that's okay because that's what was supposed to happen anyways, right? So, yeah, we're just going to sit back. Still long Netflix too, by the way. Just an FYI. Just an FYI. Market kind of creeping up to the 10 SMA there. Meta getting a little bit of love there, like basically one candle. What do I like about well, I like TradingView because it's pretty simple and quick to use. I like Thinkorswim because I've been using it for forever. And I have a lot of different studies and stuff that I've made on it over the years that I'm using. So, yeah, kind of that. Yeah, Meta kind of picking up a little bit there. It's definitely over the 50 SMA, so it could obviously be picking up a little bit into a long. The VIX is kind of starting to slightly break down a little bit. Could add some fuel to the fire for the market, hopefully, but it's just very brief for the moment. But yeah, so Thinkorswim, we got a bunch of studies on. TradingView, super easy to use. Yeah, so I like those. Lightspeed's good for fast execution. NinjaTrader's good for futures. Got a NinjaTrader's account, Lightspeed account, Webull account. A lot of different brokers for a lot of different reasons. Haven't used my Lightspeed account in a long time, but I use Webull like all the time. NinjaTrader occasionally, etc. But yeah. So just kind of figuring out what platforms you like, why you like them, and so on and so forth. The only way you can do that is start using them. Start using them. Tesla started creeping over its 50 SMA, but arguably needs a back test of the 50 SMA, so I think that one's a little too soon, which means if it back tests, it'd be going back towards that 413s. There goes Tesla falling back. Well, not quite, but pulling down to its 413 as we were kind of thinking. I mean, that's pointless. It's not really anything, but here comes the market back down to the 50 SMA. What do you know? Do we bounce again, or do we finally get the breakdown? Would not be surprised if the market just straight scums out. What it normally does, but we're here for it. We're here for it, folks. We sat for, I don't know, what time did I start streaming? Like 7 o'clock today, and since 7 o'clock, we have pretty much kept you on the right side of the market. Isn't that crazy? Since 7 a.m., we've been on the right side of the market the entire day. Wait, I started streaming maybe like 8. Yeah, something closer to like 8. Oh my goodness, look at the market. Oh my God, it's so scary. It's going down. This thing is just on the freaking verge. What's most likely going to happen is if it's going to break down, it's either going to do it later this afternoon, or it's just not going to do it till like after hours, or they're just going to do it during the pre-market. But just based off the way the market's moving, I would suspect that the market is not cool enough today to allow retail or people to participate on a drop if there's one to come. If there's one to come, they're going to do it when most people aren't participating, is the way it seems. So, yeah. Which means like maybe after hours, maybe literally when everyone's sleeping or not paying attention. That's when they like to do those kind of things. We officially have hit the 200th video. Let's go, people. Let's go. Before this year is over, I don't know, we're probably going to have over 3,000 videos. Maybe not. Probably not 3,000, but a couple years we're going to have like 30. Because I'm just going to be pumping out so many YouTube short videos. It takes me 2 seconds, right? It's like market here, market there. So I'm thinking we're going to have quite a lot of videos coming out over the next couple of years. I don't think a lot of people are going to be able to keep up with that. But that's okay. You guys will have a huge treasure chest of fun videos to go through. Ones that are, predict markets, show strategy. I mean, it's going to be like a friggin' treasure chest. Oh my gosh, the market comes down into algorithm support and does not break down. Who would have freaking thought? What are my, no apologies at all. I'd like to know what your projections are for the channel. Really my effort, and I've had other YouTube channels in the past, and I used to run a trading education website, all those things. But really just for the moment, the objective is just to be here for free on YouTube for the foreseeable future, trying to provide some of the best market forecasting and analysis that's even available on YouTube during live trading hours. The objective is to hopefully shed light on the market, prevent people from losing money, keep people on the right side of the trend, just like we did today, and help people realize trading is significantly challenging. Most of the strategies in the market are okay, even like mine. I mean, it works great at times and doesn't, so really the effort really is just to provide the best possible financial market news and forecasting. Like that's the way I see our channel. I'm just a one-man solo guy who's been in the market for 10 years, done market education, market mentoring, have had very successful years, very bad years, just enough years under my belt that really all I want to do is be here to do what I like doing, which is market forecasting, analyze, trading, and investing, while simultaneously providing what I feel is in my opinion, what I feel is some of the best market analysis you can find on YouTube. Unless you're talking to my older business partner, Brandon, then he's arguably one of the best futures traders I've ever seen. So I think you would go visit Brandon J Trades for some of the best futures trading you can probably find on the internet that I've been exposed to thus far. And as far as financial market forecasting, I would say we're probably one of those channels. That's it. That's my hope. That's it. I don't really need anything else in life at this point. You know. Yeah. This is the only social media account I pretty much use these days. I used to have a Twitter account. I used it, then I deleted it. I deleted Twitter right after. It was funny because I used to use Twitter and then I deleted it right after telling everyone Bitcoin was going to top in October of 2025 years ahead of time, and then told them the crash was going to be to 58K, and then I just dipped on Twitter. That was fun. But yeah, I used to do pretty much everything I was doing here on Twitter, but Twitter wouldn't really allow us to grow much. So you kind of, and that's the thing is at the end of the day, unless people are willing to hang out, chat, communicate, have fun, and watch, it's like, part of it's like, well, what's the point if you're just talking to yourself all the time, right? But yeah, if people are willing to come, hang out, listen, spread the word, help really share what I believe is valuable information that can dramatically help other individuals, whether that be in trading, long-term investing, and really just avoiding the traps of the day trading market that I unfortunately had to go through. That's really all it comes down to. And then helping people realize that trading usually probably won't make you a ton of money until you get really good at it, which is probably going to take extremely long time. And then even then you probably won't make it. So you have to start with just investing, and like we maybe explained earlier, is the pyramid, right? Your trading should be a small portion of your overall capital, right? I don't know if you're still listening, but like for example, right here, I'm just whatever, let's do this guy, right? So like this is my real estate portfolio, right? My day trading account is not $930,000 and 280 whatever, right? So it's not day trading that I'm, necessarily getting rich doing, or if you will, or trying to make wealth doing. There's other ways, right? It's long-term investing in the stock market, owning businesses, trying to start businesses, which I've done in the past. Me and my wife might be looking at buying a medical practice, right? That medical practice makes money, then I can go buy more stocks, or I could put more in a day trading account if I want to. So I grow the pyramid on the top a little bit more to have fun and risk in this way. Right, so it's all about, for me, just investing as a whole, and day trading or swing trading or short-term market movements that generate appreciation of capital that just happens, right? Pretty much any time, what I came to realize for myself too, and it does come down to the individual investor and trader, but what I've come to find for myself is that the more hyper-focused I am on one style of investing, the worse I end up doing. Basically my biggest losses in trading always came from, it was like a psychological cascade, which starts with winning lots of money, then starting to lose some, and then trying to fight it back, and then being mad that it's not working, and then you kind of cascade a bit and you lose. And so that's where it was kind of like trading is going well, making money, right? And then you kind of start to lose grasp of reality a bit, which is like it's hard to perform at that high level consistently for a really long time without drawdowns. And then when my drawdowns came, it was that hyper-focused fight to feel like you have to get back what you had given away, which then leads into a cycle of not working, right? And then eventually what happened for me is just like it's kind of a burnout, right? Where you lose interest in the market a bit because it's just not working, right? You're no longer consistent the way you were. And as I started to take a step back and not be hyper-focused on winning anymore, which is ironic, when I tried to not trade at all, I started to win again, right? And so now what you're kind of seeing right now is just sort of that version of going through the cycle of making a lot of money, losing a lot of money, and then kind of bouncing back and then finding stability in my overall investing game, right? My portfolio of real estate has grown. That stabilizes me. I have big long-term investment accounts that I could not touch, and they'll be appreciated into the 6-figure marks or whatever, 7 figures, by retirement.
So I'm not forced to try to make money from trading. So now I can just sit here, trust that I have strategies that at any given point on any given day may provide a setup. And if I'm wanting to or willing to put risk on, I can. It won't make or break me. And that keeps me in a position where I realize I don't have to actually do anything. So I can just sit, right? And that allows me to arguably read markets for what they are, which is I'm not just glued to a screen like, oh, candle up, candle down. Like I can tell you right now, I know like Amazon, right? Amazon's positive, Netflix is positive, Apple's positive, Meta's just now getting positive, Tesla's getting positive. You know what? Maybe you should add some Tesla. Should I? It's what I don't like is the market, though. I hate the way the market looks. And if you buy into equities and the market doesn't perform, then you get shit on. So yeah. So anyways, that's that. So it's not like I'm sitting here trying to just pass futures evaluations accounts, right? I have long-term investment accounts. I have real estate portfolio that I manage. It's a $1.7 million real estate portfolio I manage all by myself, right? So that's one portion of investing. Then I have, a Roth IRA account that I'm trading in right now. I have another investment account that I'll trade in right now. And then I have the M1 portfolios, which is long-term dollar cost averaging, sell signal, dip buying, standard deviation oversold dip buying strategy. That's basically a case study for the internet. So you can see it again. For me, it's just basically all about a big game of investing. Now, if I was the world's best trader in the world and I was able to pull millions of dollars out of my ass in the market, yeah, I'd be going way harder. But I learned that that's just not me and not the case. And so the sooner I realized that, then the sooner I kind of started getting out a little bit of my slump and arguably like mental, psychological, depressional, pissed off, like, gosh, like, why'd you have to give so much money back? Now it's kind of like, well, I could die tomorrow and whatever, Now that I've kind of learned myself a little bit more, maybe grown up a little bit more, matured into, my personality as an investor, this is where I sit. I don't feel pressured to do anything. I don't feel rushed to make a trade. I could do nothing for the rest of my life and I could retire realistically, so I could just live off my wife's, she makes great money. I could just have her be my sugar mama if I wanted to. So we're doing okay. It's more about being here in front of the screen, learning every day, growing wealth, my portfolio the way I see fit, trying to help prevent people from losing a shit ton of money the way I did at one point, and not sell you on dreams and hopes. There's plenty of people on the internet to sell you on dreams and hopes. I've never been the one to do that. I won't do it. It's not easy. Nothing's easy in life. And there's plenty of people on the internet to provide analysis, and there's a lot of, I try to do foresight analysis. Like that is literally the objective. One of the objectives of this channel is to provide foresight analysis, meaning we will give you a pretty good idea, probability of what you will see today. Areas the market will go to, how it's probably going to react at this level. And I don't want to sound arrogant and cocky, but after this many years, we do a pretty good job at forecasting it. It's your psychological barrier that will prevent you from doing anything in the market, right? I could have, if I wanted, tried to buy this dip. I could have tried to buy any one of these dips today, and literally any one of them would have worked to a degree. I didn't try to do any one of those. Why? Because I'm more focused on the fact that I just don't really care about these little dips for the moment, because I do honestly think that the market will maybe go into a breakdown. So the bigger, maybe better trade to concern myself with is still to come, right? So, that's how I'm sitting right now. In the beginning of the day, we said it's going to be a dumb day. Literally, you've seen the market just do this all day, right? That's awesome. That's awesome to be able to wake up and before the stock market opens, they tell you it's going to be a terrible day, pretty much. And then it's a terrible day, right? So that's a nice thing to be able to do. And that's why I'm arguably here on the internet, so that I can tell you guys it's all going to be a terrible day. And it's a terrible day. Are we always right? No. No, the market is a challenging beast. But you cannot deny. Did say it was going to be a terrible day. And here we are. And even if they break down the 50 SMA and we go into a sell move, I still don't think they're going to let it break down right away. I still think they're going to play some games, right? Like everybody's been trying to hold this market long all day here. So the first time it breaks, maybe, I don't think they're just going to drown it out. I think they're going to drop it, and then they're going to do some back tests, and they're going to start the whole bullshit again. I'd say you'd be very, very lucky to get a breakdown today. It's just, man, it's challenging. They're not willing to let it happen, right? And as I kept, explaining here too, is you have the volatility, VVIX. So if you look at VVIX here, hold on, sorry. If you look, I know there's only two of you. It's not like we're talking the entire world, but for the two of you, you're going to get the sauce. You've always been getting the sauce. You're getting lost in the sauce, actually. So yeah, when it comes to the VVIX here, you can see it's straightforward, right? People that are hedging downside risk, they have their bets on. The bets are on, right? They haven't taken their bets off. So I am not willing to go long the market. I'm willing just to wait because there's a market right now that is telling me that people are they're hedging bets. All right, hold on. You're starting to get a little snappy magoo. Is that going to be it? So look at what happened right there. It's not much, but there's subtle things. Ready? So we just finally broke below, for the first time in some time, the first 1 minute candle below that SMA. Now, right when that happens, you're going to see what? Look at the VVIX jumped up a little bit. All right, it had a little pop here. That's not much, but that's algorithms, guys. You see how an important level breaks and instantly the hedging of volatility picked up, right? It's things like that. So we can see the hedging, hedging of volatility is still on. So that tells me people that are smarter than me, people that have more money than me, which isn't a ton, they are not positioned to blow the market up long right now. They're leaned I'm not trusting this market. Okay, so I'm not going to trust the market. Okay, and then when I look at the volatility index is just basically sitting at its decision. It's in the decision phase. It can either continue its long or it could break down. It's just sitting there. I don't know, who knows, maybe, but I can clearly see it's not breaking down. That means we're not optimistic on the market, and I can see people are hedging downside risk. So I'm just sitting here going, we're going to wait. Because that tells me the markets aren't strong, right? We're not going to rally the market when everyone's all fearful, okay? So far, what have you got? Every single long sold back into because people are hedging downside volatility, and volatility and fear is elevated, not only in price value, but in terms of trend algorithm, right? This is the type of stuff they don't want you seeing on YouTube, I would imagine. I mean, I hope this is the type of stuff that YouTube wants people to see. We'll see, though. So right here, this is a 1 minute chart. Basically, say you wanted to be bearish because it's below the SMA. Well, actually, this is double check. It is. But if it doesn't just break down and keep going, then it's going right back to the SMA. So it's so far it's broken down. Basically zero follow through yet. See how it's just sitting there, not moving. If that lasts for too much longer, they're going to press this market right back to the 50 SMA. But just for fun, I'm going to start a little short here. If it works, great. If it doesn't, well, I already know what it's going to do. Right? So basically, the market has two options. It's either going to go and just keep going down to some degree, whether it be like that, or it's not. And it's going to do what? It's going to have to back test the 50 SMA and then decide if it wants to lower high or if it wants to scam and then go like that. So I put on a small short. I'm willing to take the bet because I've been waiting all day. I'm not super optimistic that it's going to go into a big sell-off, but I'm willing to take some risk just to see. So if I'm right, sweet. If we're wrong, well, who cares? Like I said, I'll be here tomorrow. Yay. 1 candle down, 2 candle down. Ooh, I didn't even notice. Or wait, yeah, that would make sense. Duh. Yeah. Yay, Marcus going down. Actually, I totally forgot. I need to do something. We need to, damn it, don't want to do that. Actually, I'm just going to do that anyways. So we need to do wait, damn it, I'm an idiot. Look at the market is going down. Yippee! Who would have thought? Who would have thought? And everyone just got absolutely sauced up all day. One day they'll turn into the stock market network. One day. All right. So again, this market still, it's so like I said, we have to anchor the volume weighted average price here. This is going to be a 1 minute volume weighted average price back test level at some point, whether it's sooner or later. So yeah, basically, if we don't just break down, the market will most likely go back to there, if not here. So that's kind of like the oh shit if we don't continue the sell-off. Which part of me is like, do I hedge my short with a long? I could. If we start to retrace in a meaningful manner, I could take a long scalp back just to hedge the short that I'm in. That's a possibility if I want to do that. But right now, it's still holding very bearish. There's no reason to maybe add long to it. I don't see a need. So I'm just going to remain on the short side until whatever. If we do a big cascade and really sell out here, I know there's only one of you, but this is the type of information the whole internet wants to know. So, but anyways, if we do end up falling out and kind of cascading, which probably isn't going to happen, we'll see. Could. We are on the sell side now. Volatility isn't really doing anything too crazy though. What was I going to say? I was going to say, that's our level we're looking for. Sorry, I don't know. Either way, VWAP right there. So yeah, whether we double bottomed ish, kind of bounce back, that would be the target. Whether the market breaks down and goes like this, that's going to be the target. It doesn't matter. That's always going to be the target. Whether it's sooner or whether the market goes down and then this VWAP goes like that and then we bounce to it later, right? That's going to be the target and a potential lower high selling opportunity. So I don't really want to chase the short down. Obviously, I'm not going to chase the short down here. But if it's a good sell move, then we would minimum hold resistance below that volume weighted average price. If it's not a good sell move, we will then break over that, and we're going to go back to the SMA calculation, right? So it's all the same jam. All right, so there's our counter trend pop back to, as we said, where it would go, hence the point of our stream. Foresight analysis, foresight projection, right? There's enough accounts on the internet to provide hindsight 2020 information, which we do at times, but the objective is to try to perform and provide foresight analysis, right? So this is how we already, it's like when you get into a short, you already know where it's going to go. If you're kind of wrong or it doesn't work fully, and now the market's just going to go back up to the 10 SMA, 6,857.01, as we already suggested before the short started. There you go. How did we know that? Because it's the system. This is just how the market works. Okay? Boom. Alrighty, and now that short essentially is done. Or well, kind of. Now the market would have to do what? The market would have to hold below the SMA to stay bearish. If we start to recover, then it's just, obviously, as we said, a scam, back up. And also, this is probably where we want to look at, like this is all the 1 minute stuff, right? So now you do like a 1 minute volume weighted average price off the low, and now this is going to be a trailing pullback target and 1 minute support for that low. All right. It was yesterday's low and pre-market low at that level. Yeah, there can always be something. I mean, if you look left on a chart, you're always going to find something there, right? Generally speaking. But yeah, I mean, obviously low a days there, like, I don't really, I think about those things, but they're so like such a second thought nowadays. I don't even really like pre-market low. Those things get taken out so often. Again, it's not something I think too much about, if you will. But yeah, so basically now the market is arguably targeting back to here as long as resistance maintains below basically where we're at. All right, there's the market pretty much pulling back to where we said it would go. Again, that is the objective of foresight analysis. That is what we provide, well, to your one person here on the internet. For the one person here, you said you're new. Our older YouTube channels got censored, and if you will, so hopefully this doesn't happen to this channel. Because, again, anywho, I gotta run. I got some golf to go play. So, love whoever you are. What's your name? Lavo? That's a tough one for a brother. Appreciate you tuning in. Thanks for asking some questions. I always appreciate that. And yeah, I'll catch you on the next one. I'll be back tomorrow, probably. Cheers. Have a good one. Where's my streaming software? Here we go.